Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 6th of February, 2021, and we're publishing our gold and silver weekly update for the week ending the 5th of Feb. We also briefly look at political events and economic reports, which could shape what happens to the US dollar and therefore precious metal prices moving forward. So let's take a look. Now first, just a quick shout out to 3 important videos produced last week. Gold back above $1,800 following stimulus vote, but for how long? Why the silver short squeeze is over but premiums will remain high for the physical. And Bitcoin versus gold and silver episode 9, can Reddit target Bitcoin next? And we've placed links to all 3 of these below in case you haven't had an opportunity to listen to them. And some of them do dovetail into our report now, today. Okay, back to last week's figures. Gold fell $33 last week from $1,847 to $1,814, having hit a high of $1,872 and a low of $1,785, a fall of 1.8% for the week. Now for interest, for those who follow such things, both its high and low for the week were lower than the previous week. And we mention this in case there is potentially a developing trend here. Now in sterling terms, gold finished the week at £1,320. That's down £29. And in euros it closed at €1,505. That's down €17. Silver fell 9 cents, falling from $27.05 to $26.96. Having hit a high of $30.10, that's $30.10, and a low of $25.92, a fall of just 0.35%. What a roller coaster silver has been this week. In sterling terms, silver closed at £19.62, that's down 12 pence, and in euros it closed at 22.37 euros, that's actually up 0.08 euros. The gold-silver ratio fell slightly from 68.3 to 1 to 67.2 to 1. Though we did see, right at the beginning of the week, this figure around 63 or late 62 to 1. Bitcoin rose just over $5,300 this last week, and its price currently stands at $39,676. The Dow Jones closed on Friday at 31,148. up 92 points on the day, and up 1,166 points on the week, fully reversing the previous week's losses. The S&P 500 closed at 3,886, up 15 points on the day, and up 172 points on the week, and the Nasdaq Composite closed at 13,856, up 78 points on the day, and up 786 points on the week. Like the other 2 indices, more than making up the previous week's losses. Oil was interesting. Brent crude closed at $59.34, up $4.30, and WTI crude closed at $56.85, up $4.65. Now this is pushing both of these towards this $60 territory, which is where a number of the OPEC cartel have been stating behind closed doors where they would like to see oil prices move towards. Some analysts are even predicting $70 a barrel soon, though we're reserving judgment on that for the moment. We see no reason, frankly, why 50 to 60 shouldn't be the sweet spot, especially when one considers what it actually costs them to drill out of the ground. But unfortunately, this market is heavily rigged, if you pardon the pun. The dollar index stands at 91.04. That's up 0.46 on the week and follows the previous week's rise of 0.35. Now our conclusion price trading range last week stated, quote, gold we see as consolidating and therefore forecast a regular price range of between 1800 and 1900, with 1700 and 2000 being outliers. And in normal circumstances we would expect silver to trade a little higher than last week, with $25.50 at the low end and $28.50 at the higher end, with $24 and $30 being outliers. However, if there is a continuance of what we saw on Friday, then $30 could certainly be breached, and easily, unquote. Well, gold traded within an $87 band of $18.72 down to $17.85. And silver traded with a much wider band from $30.10 to as low as $25.92 at its lowest level. So let's address gold first. Gold opened up originally at the market open last Monday. Fell back quite heavily on Thursday, reaching week's lows, with a marginal recovery on Friday. You see, the dollar strengthened last week, and as we mentioned in yesterday's video, that economic data published was relatively positive for the week, with one or two exceptions. That said, the non-farm payrolls, though in positive territory of 49,000 job increases for January, and compared with a minus 227,000 job loss essentially for December, these figures were disappointing against a minimum expectation of 50,000. What was perhaps a little more concerning was that of the new jobs created, only 6,000 were from the private sector, and almost 4 million people have now been out of a job for 6 months or more. This is part of the reason we saw some recovery in the gold price on Friday. With US yields rising nearly 9 basis points last week, of course, though, this is going to limit gold's progress short term. Looking at the technicals, the expectation is to see gold test former support at 1819 on the upside, with a downside support level of around 1764 lying underneath. Both short and medium-term momentum have turned negative, and the fast stochastic is pointing to a sell signal, with the MACD also pointing towards a sell signal. Broadly speaking, our view is that if gold can get back above 1850 and hold for more than just a couple of days, this is likely to prove positive moving forward. But if it falls down to 1750 and holds just below that level, then one cannot necessarily rule out a negative trend may be beginning to occur. And this is roughly, though, these two price ranges, it's roughly where we see the battlefield for gold being played out over the next week or two. Looking at silver, it's been a most interesting week, not least because of the Reddit Robinhood short squeeze, which started last Friday in earnest and continued into Monday, seeing silver peak on Monday morning at $30.10, some 10 cents higher than we forecast as a possibility in one of our earlier videos, I think the one we produced on Sunday, about $1,000 silver, which some analysts were predicting was likely to happen. Then came the almost inevitable fallback. We did warn listeners, and also to beware of ultra-high premiums, with silver dipping to its lowest level on Thursday for the week and staging a small but determined recovery, in fairness, on Friday to get close to that all-important $27 level, which it closed just marginally below. Now, we've witnessed with this push that $30 once again offers significant resistance, and $26 is offering relatively strong and reasonable support. Whilst increasing stimulus packages does limit silver on the monetary side, it certainly helps it potentially on the industrial demand point of view, if the economy manages to improve as a result. This is partly, not exclusively, but partly the reason we're quite bullish silver over the medium term, even when compared with current levels, as we start to see the global economy really start to drive forward and upwards again. Now, it may take longer than many would like or anticipate, but nevertheless we're confident there will be a recovery at least from current levels, even though reaching the pre-COVID levels may take a few years to achieve. Hopefully not, but we have to be realistic, certainly in terms of employment. We're keeping an eye for now on the US dollar and interest rates or yields. March US dollar index futures were trading sharply lower on Friday after posting a dramatic intraday reversal to the downside. The chart pattern suggests the short-term rally may have come to an end after Friday's US jobs reports suggested that some recent aggressive buyers may have overplayed their expectations for a stronger US economic recovery from the coronavirus pandemic. Listeners may have noticed that Again, early in the week, we did say that if the figures are much better than expected or much worse, that would dictate what would happen, A, to the dollar, and B, gold and silver prices. It was relatively close to market expectations, though some of the underlying aspects of those figures were highly questioned. Nevertheless, a number of investors were perhaps anticipating an even better result than actually occurred. And we shall have to wait and see how this plays out when markets reopen. Now, what did happen last week is that it's brought the question of silver as an investment back to the attention of many who had perhaps long since forgotten about it. With Joe Biden's plans on the environment affecting products like solar panels and his positioning behind 5G, which many believe will help silver well into the future, it may prove ironic for many that this presidency may very well deliver the high silver prices many stackers and investors have been holding on for during the last 8 or so years, especially if he manages to get the relatively high level of stimulus packages through Congress. Now, looking to next week's US economic data, we have the following being announced. Monday, nothing scheduled. Tuesday, NFIB Small Business Index for January and job openings for December. Wednesday, perhaps more important, Consumer Price Index for January, Core CPI, Federal Budget both for January, and the wholesale inventories for December. Thursday, of course, our weekly jobless claims report, and Friday, Consumer Sentiment Index preliminary for February. So Wednesday is perhaps the largest data day, and all eyes again will be dedicated to the Thursday jobless report. On the political front, President Biden has successfully achieved stage 1 of his proposed $1.9 trillion package to be adopted, and we shall all know for sure in the next couple of weeks whether it will be fully accepted. So where does this leave us for gold and silver prices this coming week? Well, gold we still see as consolidating and maybe proving a little weaker, but again, if the dollar has reversed and starts to fall, that will be beneficial. And so we see a regular price range for this next week of between $1,750 and $1,850, with $1,700 and $1,900 being outliers. We're slightly downgrading these figures compared to last week. Silver we see trading broadly between $26.50 and $28, with $25 and $29 being outliers. If it were not for the dollar reversal on Friday afternoon, we'd be more pessimistic for both gold and silver. But we need to see how this plays out once the Forex markets open and trade a little after the weekend. Now, tomorrow we should be publishing episode 10 of Bitcoin versus Gold and Silver. So if you do follow Bitcoin, don't miss it. As we stated last week, we were expecting a move up in the price of Bitcoin, and we've seen already quite a reasonable staged recovery has occurred. And we are expecting or anticipating higher prices into the future. What do you think? Do you agree with us or disagree? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. We will, for certain, have a Richard and Greg posting tomorrow on the Richard and Greg channel, and we apologize to regular listeners of that. Greg has been out of sorts the last couple of weeks. He's much better and much more active now, fortunately. Thank you once again. Have an enjoyable weekend, a safe weekend, and a prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.